everyone, and welcome to the CLS Market Review for the month of February 2014. I'm Matt Harwell. This past week, CLS held its annual President's Council Conference. The event took place this year in San Diego as part of our parent company's inaugural North Star Summit. At President's Council, our top reps gather to network, share insight, and provide feedback directly to CLS. While in California, we had the opportunity to record this month's market review on location. Let us first begin, however, with a look at market activity in the month of February. Here now is my favorite Chief Investment Strategist, Scott Kuby. Scott.
Thanks, Matt. It was a good month for the stock market as it was able to recover its losses from January, and the S&P 500 even hit a new all-time high. In the end, the S&P 500 gained nearly 5% for the month, while small-cap companies also gained nearly 5%. Overseas, the international stocks gained slightly more than 5%, with emerging market stocks gaining 3%. The bond market, meanwhile, gained less than 1%. The 10-year Treasury yield finished the month at 2.65%. Now, back to the host that always gives us at least 5%. Matt?
The ever-engaging Scott Kuby, everyone. We go now to beautiful San Diego for our monthly market review with Chief Investment Officer Rusty Vanneman. Rusty.
Thanks, Matt, and thanks, Scott. I'm coming to you from the USS Midway aircraft carrier in San Diego. It was built in 1945, the largest ship in the world until 1955. It served until 1992. Now it's a museum at San Diego Harbor, and a really cool one at that. Over 1 million people visit it every year.
Needless to say, it is an impressive ship. It obviously took a lot of time and resources to build and to maintain. Also, given its flagship status for our naval forces to advance and protect our interest, it was extremely important to protect. It sounds a lot like a retirement portfolio. Another thought crossed my mind while walking the deck here. What are some of the reasons our military is effective, and what lessons does it have for investors? There are lots of reasons, of course, but I'll offer a few that also apply to successfully managing an investment portfolio: purpose, structure, and discipline. This thought ties into a new study that caught my eye this past week. It was called Which Investment Behaviors Really Matter for Individual Investors. The study came out in January from a German university in Frankfurt. For a link to this study, please refer to our weekly commentary at clsinvest.com. In this study, using a data set from a European discount broker spanning trading activity from 1999 to 2011, the authors studied 10 investment behaviors considered detrimental to investor returns. This included frequent trading, chasing performance, and a strong preference for their own country's securities, otherwise known as a home bias. What was interesting is that they found the two behaviors costing investors the most were under-diversification and a preference for what is considered lottery stocks. Lottery stocks are those that trade at low prices and have high non-market related volatility. Under-diversification, meanwhile, was defined as investing in only a few securities or highly correlated securities, or both. In short, according to the study, eliminating these investment behaviors would improve the average investor's returns by a whopping 4% per year for removing under-diversification and by 3% per year for eliminating the lottery stock preference. And these mistakes can easily be avoided. Building and maintaining a balanced portfolio and getting the necessary advice to stick to it can significantly help investor returns. In fact, according to the study, the return difference between investors who avoided these mistakes and those who made them was large, over 8% a year. Over the lifetime of a portfolio, that can really add up. As advisors and investors, we need to remember a few key things. Portfolio mission. Our portfolio's purpose is to reach our long-term financial objectives, to build and maintain real wealth. It's not for entertainment. Portfolio structure. Balanced portfolios work. Investors in balanced portfolios tend to have better investor experiences. And portfolio discipline. We need to stay the course with our objectives in balanced portfolios. For many investors, this is where quality advice pays.
In the end, I believe in the power of advice and the power of balanced portfolios. Like the USS Midway, it builds a strong defense for what we care most about. Thank you for your time and trust. Stay balanced.
Thank you, Rusty. That was actually engaging. For a complete monthly market review, I invite you to download this month's PDF on clsinvest.com or subscribe to our podcast on iTunes. That concludes our update for the second month of 2014. We hope to see you back next Tuesday. And as always, thank you very much for your time and trust in CLS Investments.